Hey guys, and welcome back to another video. Now, this video has been based off a subscriber request. I'll pop their question on the screen now, and it's a question I get really commonly, so I thought it'd be very good to do a proper video about this, keeping it clean, keeping it simple, giving you good, proper clarity on how things should be done properly. So I hope it helps. We're going to drop in some market analysis now, and I'm going to teach you about where I personally place my stop loss placement, and then how we go about then calculating position size of that. As always, guys, if you're looking for some mentorship or some coaching, links are in the bio, but enjoy the video and I'll catch you at the end.
So guys, as you can see, we are in a bullish market on gold. This is the daily time frame. So nice and clean, nice and simple, just how we like to keep our charts, and obviously on the higher time frame as well. So we have this nice bullish leg here. Now, on the 4 hour, I won't confuse things, but on the 4 hour at the moment at this time of price, we then start to see a pullback, which I'll show you now, which we're expecting. So that confirms obviously this new daily leg to the upside that's made a new higher high. It's confirmed we finish as we've now started to have a pullback on the 4 hour, which has then allowed the daily to pull back, as you're seeing here with this candle. Now, this is our area of interest, and there's multiple reasons why, and we'll save that for another video. But the premise of this, basically, one thing I will say is that we know from what I know from back testing and over many years of market data on gold, it loves the 50% and the 61.8 region really nicely on gold. Not all of the time, of course, but a lot of the time. And so that gives us a really good weighting a lot of the time as to where price may retrace to before then pushing on to the upside. There's obviously other multiple reasons we would take this trade, but again, that's for a separate video. Let's keep it solely about risk management, so we keep that clarity great for you guys. So when it comes to then position sizing, we would naturally grab our long tool, and obviously let's pop our area of interest. Well, our area of interest is between the 50% and the 61.8. Let's say we've taken off 2350, nice round psych number, which we tapped into on this wick here. Now, targets initially will always be the minus 27% of the fib. Well, it is in my strategy. And then what we would want here is, depending on which level you're taking the fib off, it would either be the 78.6 or it would be most recent structure. Now, on this example, it was a piece of 4 hour structure that actually sat around 2340. So in this example, because it was more of a 4 hour trade, but I'm just showing you the daily instead, so it's a lot easier to visualize. But on this example, the stop loss was actually around a 4 hour piece of structure. And if we'd broken that structure, we would have broken the 4 hour structure to the downside, hence a potential trend change. So that's why the stop loss was placed there. That then gives us an amount of pips, and that from a 2350 entry to a 2340 stop loss, that is 100 pips on gold. So what we would then do is we would head to our XAU calculator, and we'd pop the account size in, we'd pop the number of pips of our stop loss in, we would pop obviously the currency pair, the commodity pair, whatever you're trading at the time, and it will then spit out a calculation like this that you can see on the screen. Now, XAU is a fantastic app. I'm not affiliated with them, but they're a brilliant app. It's clean, it's simple, it can give you that position size brilliantly straight away, no messing around, no fancy maths to do, and job is a good one. Now, on this trade, it gives us a risk reward of a 1 to 6. Now, yes, to be a swing trader, you have to be a lot more patient, but I believe that is the way successful trading looks, and it's what has worked for me. So if we then let that play out, this trade ended up going on for another tap of the area of interest down here, and then it's gone on to then go into targets. Now, that actually ended up playing out over the course of 3 days, which actually, in the grand scheme of things, is absolutely nothing. But sometimes this type of move can take a week. It can take a week and a half. But it's a monster of a trade. You're looking at a 500, 600 pip trade here, and it's just an example of how to then position size. Now, the position size, the lot size it spits out at you on XAU, it will solely depend on the stop loss, the number of pips of the stop loss. Obviously, the account balance number is going to change as you make profit, hopefully, and not losses. But It's all to do with the number of pips that stop loss is. And this is why every single trade you take, your lot size is going to be slightly different, or sometimes significantly different, depending on whether it's a day trade, a swing trade, what your targets are. But it all is all down to and dictated by the number of pips of your stop loss. Because if we know the number of pips of your stop loss, we can then work out what you stand to lose, not what you stand to win. Okay, and again, if your stop loss then equates to, say, 1% that the Stenu app has given you, then whatever your targets are, if it's obviously a 1 to 3, a 1 to 4, a 1 to 5, whatever it is, you know you stand to then make that upside. But focus less on what you stand to make, focus more on what you stand to lose. So that is how I would simply calculate things. Don't overcomplicate it. But when you see people online stacking positions of multiple of the same lot size of multiple positions, or you look at someone's trading history and they are trading the same lot size every single time, it's nonsense. It's crazy, because they are not genuinely adopting proper risk management. They are not genuinely adopting the right calculations. It is so important that you do this calculation for every single trade and scale-ins, everything, okay? Risk management, and this includes what I've just discussed, is the biggest downfall to unsuccessful traders, or it's the biggest barrier that stops traders from making it and breaking through and becoming successful. So it's so crucial. I really hope this has helped and given you clarity, but keep the calculation simple and you'll be great.